Well, welcome to Getting Started with Technical Analysis, everyone. My name is Barbara Armstrong. I'm a coach with Schwab and delighted that you are joining me here today to talk about all things indicators. So we're going to talk about moving averages, both simple and exponential, and what really is the difference between them anyway. We are going to talk about something called a golden cross. We're going to talk about a death cross. We're going to talk about stochastics and MACDs. And if this is kind of making your head spin and you're thinking, this is a lot, I'm not familiar with any of them, you're in exactly the right place because this is an introductory level class. If you are familiar with all of these, then this might serve as a good review. And we're also going to talk about a trading plan called a 3 green arrow trading plan, and we're going to place a couple of example trades. So we've got a lot to cover in our 45 minutes, so I guess I better get cracking, right? I want to thank all of you who helped bring this class to life by being so participatory in the chat. We've got Brent Moores with us. He's a friend and fellow coach. He teaches a lot of great classes. And when I was at an event in Chicago, someone said to me, you know, Barb, I really like your classes, but Brent is my absolute favorite. So if you haven't checked out Brent Moore's webcast, then you're doing yourself a disservice because he brings despite how young he looks, decades of expertise to the table every time he does a webcast. So you'd be in good hands. So hello to Marcus and AP 514 and Vic and Tanya and Scott and Brown, Buffalo and Neha and Kurt and the rest of Riceberg and the rest of the gang. So glad to see you all here. Know that we're going to look at a lot of charts today, but everything we look at is for example purposes only. The example trades are just that. They're examples, not recommendations. We use the Paper Money software application on the Thinkorswim desktop platform, which is a brilliant place to learn. But there are some nuances and differences which we'll discuss as appropriate. Also, this is a class about technical analysis, but that doesn't mean that Schwab recommends that you only use technical analysis. We want to be aware of what's going on, politically within the world and globally within the world. Tariffs have been a topic that have had an impact on the markets of late. So we need to be aware. And then we've just gone through most of earnings season, that all kind of colors, our decisions. So this I've designed to be taught at about a 9-week rotation. We may add a couple of extras as we go. I thought we were going to talk about divergences today, but we're going to talk about a range of different indicators. And we may point out a couple of divergences, but that will be our focus next week. Okay. So we're going to talk about, what a technical indicator is. We're going to review some common technical indicators, trend and momentum indicators. We're going to look at simple moving averages. I'm going to compare that to an exponential moving average. We're going to look at a MACD, a stochastic, and a relative strength indicator, or RSI. And then we're going to look at how we can use those as a means of providing trade signals, either bullish or bearish, to perhaps enter a trade, whether that's a stock trade or an option trade. Okay, so what's a technical indicator? So, we use different chart tools, in order to provide, either clarity or confirmation. And here's a MACD histogram. This is called the baseline. And these typically appear at the bottom of the chart. Here's a stochastic, and we'll get into more details on those, but they're constructed using historical price activity, volume, or a combination. Okay. And this is kind of one of those, like this, what we're trying to do here is figure out, when you use one of these indicators, how can you use it to get where you want to go? So my role here isn't to teach you, like if you were driving a car, I'm trying to teach you what a stop sign means, not how an engine works or how a fuel injection system works. But I'm teaching you, if you look at the gas gauge and it says, low, that you need to stop and get gas. I'm not teaching you about the system that influences the indicator, if you will. So we have to tackle kind of one thing at a time, but there are hundreds of technical indicators. And when I first started with Schwab as a coach, and as many of you know, I started first as a client of this education. Somebody called and asked about a Darvas indicator. I'd never heard of it. And most people on the team hadn't either, but it was created by a guy who was a ballroom dancer who wanted to create his own indicator and did. It's the only time I've ever heard it discussed. And I've now been looking at charts daily for, 9 years. I started back in 2011. So it's been a hot minute. So we're going to look at those that, many investors tend to favor. Okay. And most of them can either go into two categories: a trend indicator, which we often will see on the chart, something like a moving average, or an oscillating indicator, which we tend to see below the chart. Okay, so when we look at a simple moving average, and we talked about support and resistance and moving averages, but it represents the average closing price for a stock or an index over a certain time frame. And this will change over time, and that creates this line on the chart. And it's commonly used to identify price trend and generate trade signals. And when we look at this simple moving average, when it's rising, we would see that as confirmation of a bullish trend. If it's going sideways, that may be an indication that a stock is moving in a sideways direction. And of course, if it's falling, we may look at that as a downtrend. Okay, so if we come out and we look at the charts, and I've stripped my chart, and you may never see my chart looking like this again, but if we come to studies and edit studies, what's the difference between a simple moving average, and let's add a simple moving average, and let's make it a 30-day moving average. Actually, let's make it 50, just to do something different, because I don't usually use a 50-day moving average. But let's use a 50-day moving average. We'll make that green. Okay. And we're going to hit apply. And now we have that moving average. And then let's come out and look at an exponential moving average. And let's also make this a 50-day moving average. And we'll make it a different color. Let's make it purple. And we'll make this 50. And you'll see here that you can base it on the open, the high and the low divided by 2, the high, the low, and the close divided by 3. The default is just to go with close. If you want to see a definition, you can click on the little question mark beside any indicator that you're adding, and it will give you a description. So it's a type of moving average that assigns greater weight to the most recent price data. And unlike the simple moving average, where if you're looking at a 50-period moving average, it adds up the closing price of the last 50 days, divides, and that's what you have. Okay? And so with the exponential, it gives more weight to those more recent days. And I don't know what the exact calculation is, but so here's our green line, which is our simple moving average. And then here's our purple line, which is the exponential moving average. So you can see when we had this dramatic fall here on the NASDAQ, that the exponential moving average reacts a little faster because it's taking these days, it's giving them a heavier weighting. Okay. So if you're wondering about the difference between the two, and even within our coaching community, some tend to just stick with a simple moving average, and some use an exponential moving average. And you may think, well, it just maybe gives you a faster indication when things are either moving dramatically to the upside or dramatically to the downside. Okay, so I just wanted to address that. Now, let's get rid of our our exponential moving average, now that I've talked about that, and this is really just a personal choice. So, but we're going to take that one off the chart. And now let's add 100-day moving average. So here's our 50, and we can come in here and let's add another simple moving average. We'll just keep it simple, pardon the pun. And we're going to make this one 100 days, and we'll make it black. I'm just making it a little heavier so it's easier for you to see. So now we have a 50 and 100. And I hit apply. So I mentioned that we were going to talk about a golden cross and a death cross. And what's the difference between the two? Well, here's a death cross. So a death cross is when you have a shorter moving average crossing below a longer moving average. So we call that a death cross. And that is a bearish indicator. And so some people might have a rule and say, hey, if my 50-day moving average crosses the 100-day moving average, I'm a longer term investor. But if that happens, then I'm going to adjust my stop. You know, I'm going to move up my stops. And had one done that when this happened, you know, well, a lot of the damage that would have happened on this day. You know, a lot of damage had already been done, right? You know, like if we look at this, how far had the NASDAQ already pulled back before we got the death cross, which was on this day. So, you know, it was down 11%. At one point, it was down 14. But again, these are somewhat lagging indicators because this 100-day adds up 100 days worth of information and divides it. And so it takes longer for this one to react. Now, if you were a shorter term trader, could you do a 10-day moving average? And we could. If you're saying, hey, I don't want to get notified like once the cat's already out of the bag. And actually, this is 9 days. We can just leave it at 9 days. And I'm just going to make this blue. You might say, well, hey, my rule is going to be if the 9 crosses below the 50, then I want to, you know, tighten things up. And when would that have happened? That would have happened, you know, much sooner, right? That would have happened here instead of here. You know, and so these are just, and so a death cross gives us a bearish notification. What about a golden cross? Well, a golden cross occurs when a shorter moving average moves above a longer moving average. So if we look here, oh, let's not make it pink. So we would call this, let me just, this here, a golden cross. This here, death cross. Death cross. How about when this 10-day move below the 50? This would be a death cross. This would be a golden cross. And so some traders will have, you know, multiple moving averages on their charts, and they'll use these as an indication to confirm changes in trend. And then we can go for a long time like we did here, where, you know, once we had this golden cross here, the 50 crossing back above the 100, you know, the 10 stayed above the 50, the 50 stayed above the 100, you know, so we were in a pretty bullish period here, you know, for quite some time. And then this came down and kind of kissed, you know, so golden cross and death cross. Yeah. And some prefer the exponential moving average. It's just a faster, it's a faster indicator. And if you're trading particularly a shorter term trading strategy, that might be helpful. Okay. So that's moving averages. And now we're going to move on from our moving averages. And what I'm going to do here is I'm going to change our 50 to a 30. And I have a reason for this, and we'll get to it a little later. I'm going to make it red. And why do I make my 30 red? Simply because the first coach whose classes I followed, he used a 30-day moving average and he made it red. And I didn't want to get confused. So I just did what that person did. Okay, so let's look now at a MACD. So, and what is a MACD? Well, it stands for Moving Average Convergence Divergence, and we're going to just type in MACD, and we're going to look at the MACD histogram. We're going to add that, and you'll see these numbers. And what this does is it uses a 12-day moving average, exponential moving average. That's what the exponential means. A 26-day moving average. From those two, it creates a 9-day moving average. And this does not have breakout signals. Well, what do I mean by that? Well, let's talk about what this indicator does. So when we look at this, it kind of says, okay, here we have this baseline or signal line. And let's come back actually to our PowerPoint for a minute, because I do have a slide on it. So, here's our rising SMA, our falling simple moving average. And then when we get to the MACD, so it uses the distance between two moving averages to show changes in momentum. So this is a momentum indicator. And it oscillates from green, which is buying momentum, where the buyers seem to be in charge, to red, where the sellers tend to have more momentum. And some call this baseline a signal line, and some simply call it a baseline. And so this is a commonly used indicator for confirmation of trade signals. Where if you see something on the chart, you may then come back and look at it down here. So to see if the MACD is kind of in agreement with your analysis. And what we'll sometimes see is what we call a divergence, where we had the sellers in charge, and now the MACD is saying, hey, the buyers are in charge. And they were for a minute, but we just hit a new, this low is lower than this low. And yet on the MACD is showing that it's rising. And so we call this a divergence. Now, have we seen this on other charts? And yes, like if we pull up NVIDIA right now. So on NVIDIA, again, we see this downward trend, and recently, what has the stock done? It was up here. Oops. And it's been falling. Yet on the MACD, we see this divergence where it's not kind of playing along. And so what might this tell us? It might tell us that the sellers, it could be waning. And, we had here these two being, if anything, slightly less bearish, and yet the trend was continuing down. And so what this is saying is, this may be coming to a close. Now, I'm going to add another indicator to this. And the one we're going to add next is the stochastics. And so stochastics, and we're going to go with the stochastics full. There's a whole, and you know, sometimes it's just a different way of being presented the same information. And again, it's using a number of different moving averages. So did I add that? Apply and okay. So now we have another indicator. And the way that some look at this, they say, okay, here is, you know, when we look at these numbers, you know, one is going to move faster than the other. But when we look at this, we're looking at this green line at the top, which indicates when a stock is perhaps overbought, and this 20 line at the bottom, suggesting that this may be oversold. Okay. And what some people will do with both the MACD and a moving average and the stochastics is add little helpers called signals, entry signals. And so we can come to our studies, and I've been asked this a lot. Like you'll see here, it says simple moving average close. So it's based on the closing price of the 30-day moving average. And then we have this no. So we could say show a breakout signal. Yes. Here. And so I'm going to add that. And then on the MACD, we have this same no at the end. We're going to change this to say, well, show breakout signals on this one too. And then, like, let's not leave the stochastics out. Let's change this no to a yes, which says, do you want to show breakout signals? And we're going to say on both sides, on both the, you know, on the 80 line and on the 20 line. So now when we come and we look at this, we can see, and let's go to Kroger for this one. So we can see that Kroger is up almost 11% year to date, which is certainly beating, you know, the S&P, which is down 5, and the NASDAQ, which is down almost 10. It's down 9%. So Kroger, which is in the staple arena, you know, has just been kind of quietly doing its thing, and it's had some ups and downs because stocks never tend to go straight up. But when we look at this 30-day moving average, it seems to be using that quite often as a support level. And when we added show breakouts, what it's saying is, hey, this is now closing below the 30-day moving average. And then we get a green arrow when it crosses back above. So the first trading plan, and Brent will be laughing in the sidelines, that I learned for stock investing was called a 3 green arrow strategy. And so what we were looking for was a green arrow on that 30-day line. So we were looking for a green arrow here on the line. And do we have one? We do. We were looking for a green arrow on the MACD. And then we were also looking for a green arrow on the stochastics. And what we can see is with the stochastics, if it gets into this overbought area and then closes below, that's an indication to sell. And then when it comes down below the 20 and crosses back above, that might be an indication to buy. Okay, and the same thing here. And so do we have 3 green arrows? Well, we had a red arrow a few days ago, immediately followed by a green arrow. So this would say that we've got momentum working in our favor on this stock. It's above the 30-day moving average. Okay. Okay. And so, you know, are there any questions on this, on how we added this? And so when we look at, you know, these times when this has been super high, we might say like, ooh, maybe we want to move up our stop to take some profits. And when it's come back down below the oversold, we might say, well, this might be a time to add to our position or to create a position if we don't have one. And so if we were looking at this and we said, well, we'd like to put a stop on this position, where might that be? We might look at this recent low here of 66.81 and say, I'm going to put my stop 3% below that. And you could make it 5%. This isn't a terribly volatile stock. So if we come to the trade tab and we look here at this little arrow, it will tell us our beta. And what does beta mean? It means when the S&P moves $1, about how much do you expect this stock to move? And it's saying about 50 cents. Like, so it's telling us that this doesn't get whipped around a lot, as opposed to, say, a SMCI, where I'm just guessing the beta is over 1, and it is, or a Tesla. These are kind of more a beta of 1.5. They tend to be more in I call them the TUM stocks. They can create some anxiety, where Kroger is more of a steady Eddie. So if we look at this and we say, okay, we'd like to buy some shares, and we're not looking at options on this one. And, you may want to come and look at the news and everything, but if we're saying we wanted to put our stop 3% below that recent low, that 66.81 times 0.97. I missed my decimal point. So that would be 64.80. So we would right click. We're going to buy custom with a stop. And this is almost a $500,000 account. So if we said we could have a $25,000 position, we could have 300 shares. And we wouldn't be over that. So there's 300. And we're going to put our stop at 64.80. And we're going to make that good till canceled. Confirm and send. Our position size, 20,000. Now, how much are we risking? We're risking $3.12 a share. Now, there's no guarantee with a stop that you'll get out at the price requested. But what this does mean is that if we get out in the neighborhood of that, we could be down about $1,000. And in this class, we were willing to risk up to $2,500. And so we're going to put this in and this stock also pays a dividend. Now, one of the differences between paper money and a live account is that dividends aren't actually paid in paper money. The other thing is that just because Kroger pays a dividend now doesn't mean it's always going to pay a dividend, but that may influence what group we put it in on the monitor tab. So we're going to put it in our dividend paying stock group. Okay. So fire in the hole. And we're going to say this was our 3 green arrows entry. Okay. So we'll see if that fills, and I can make sure that it fills afterwards. So we bought Kroger today, and if we wanted to put that on the chart, okay, so that's Kroger. Now, could tariffs affect Kroger? Absolutely. And could it affect their profit margins? Well, if they're trying not to raise their prices, then it could squeeze their profit margins. I didn't just create a script, Isaiah. This script that's up here is in the tweet or X post pinned to the top of my Twitter feed. So you can grab that there. These are all just basic studies that we've added to our chart. So if we wanted to look at another example, here's another stock that is in the same consumer staples category, Costco. And do we have a green arrow on the chart? No. What was our last arrow? It was a red arrow. Do we have a green arrow on the stochastics? No, the last arrow was a red arrow. Now, sometimes we can end up with something that we call a phantom green arrow. And what do I mean by that? Well, if we look back here, and let me just bring my drawing tool up. So what creates the green arrow? Well, the green arrow is created when something goes below this line, below this 20 line, and then comes back up. But what if something comes most of the way down, but doesn't quite go below and then turns up? So here we might look at this and say that's kind of a phantom green arrow because it did come down. It just didn't come all the way down to below the 20. And here it came right down and kissed it, but because it didn't close below, then we didn't get a green arrow. And some might call that a phantom green arrow also. And so with this one, you know, if we're trying to follow that 3 green arrow plan, it's not above this 30-day moving average either. And so what might we do? We might just say, you know what, I'm going to wait. Yeah, like, so somebody's saying, and I like your question a lot, is there a sequence to the green arrows? Like, do you look at the chart first, then the stochastics, then the MACD? I look at the chart first, and then I come down here for confirmation. Because typically when we have this situation, it's a lagging, the MACD and the stochastic tend to be lagging often a little behind. They're often a little bit behind the 30-day moving average. So if we look here, you know, at GE, for example, we have a green arrow here on the 30-day moving average. And sometimes you can have a phantom green also, or a phantom red on a moving average. Like here, it came down and, you know, it kissed it, but closed just barely above, you know, and so we didn't get either the red arrow on this day or the green arrow on this day, but I would call that a phantom red and a phantom green, you know, and then here we did have a red arrow and then it closed oh so close, but we didn't end up with a green arrow. And then in fact, it did pull back. So, but we have a green arrow here, and then on the MACD, we still have a red arrow. This hasn't turned back around yet. And so if you're waiting for that, and on the stochastics, this hasn't turned around yet either. And so if you're saying, well, I really want to follow this plan, well, then you don't have an entry on this today. And so it may mean that you get in a little later, but you've got stronger momentum if you wait for these indicators. And this one may not come down all the way. Like here, we had an actual green. I would call this a phantom green. And if this turns up, you know, here now, I would say this would be a phantom green. Yeah, so, you know, I always look at the chart first, and that's just the way that I do it. Let's look at another one. CELH. So, you know, here's something that was downtrending for a long time, and then it just started turning around and turned around pretty dramatically. And so when we look at this, do we have a green arrow? Well, we had a green arrow way back here, and then it came down, and would you call this maybe a phantom red? It came really close, or a phantom red around here, and then a phantom green, perhaps. But then it's just continued on up. So you would, you know, I would say, yes, there's a green arrow here, but that green arrow happened quite a while ago. Now, do we have a green arrow here on the MACD? Yeah, and that one happened a long time ago too. And then here on the stochastics, it's saying overbought. And so if you're actually looking for those 3 green arrows, you're going to go, yeah, better move on, frog. Yep, not quite there. CVX. Now we had a green arrow way back here. So we have our green arrow, but some might say this is so far above the 30-day moving average, I might rather wait for it to come back. And others would say, hey, I see opportunity, I'm going to take it. But again, this is indicating on the stochastic that it's more in the overbought category than the oversold category. So if you're looking to get in when something's just turning around after having been beaten up a little, this would not be it. Okay? Does that make sense? Yeah. Now there's one other indicator, but so I just wanted to share this 3 green arrow plan with you. And is it like the IG, the end all be all? No, it's just an idea. And you know, some of you may say, well, hey, like we got a green arrow here, but we were setting up this cup and handle. I wouldn't have entered there. Well, I may not have entered there either, but we had that go ahead and then it did break above this resistance line. So it's just a factor that we can take into account, right? Now, the last one, and this is one that's very commonly used. It's another, you know, top of the hit parade. It's called the relative strength indicator. And again, if you click on this little icon, it will tell you that this is an oscillator. So it's going to show up at the bottom of the chart. It ranks the strength of a security from 0 to 100. And again, you know, and where the stochastic is 20 and 80, the RSI uses the 30 line for oversold and 70 for overbought. And you can adjust those if you like, but these are what the defaults are. And I have seldom personally seen, you know, a need for me to mess with those defaults. They're defaults for a reason, but you can do whatever you like. You know, and again, you have that ability to, you know, add buy and sell signals on that. And just so we're not confusing things, I'm going to take the stochastics off, and then we'll take the MACD off also. Just, you know, the confused mind does what? Nothing. Yeah, the confused mind tends to do nothing. And so we're just going to keep it simple. And this is one that is, it is a great indicator to just get another feeling for, or an indicator that is often used to get a feeling for, you know, are we oversold? Is this, you know, in the bargain bin right now? Or is this getting a little pricey? You know, is it in that, you know, the Stanley mug brigade, which I happen to have one up right here at the moment. But, you know, are we, you know, paying a premium for this? And what this is saying with CVX right now, it kind of was in that overbought territory, you know, and now it's back down below. And this might just be a cautionary tale, right? You know, and when it was down here, you know, in the oversold territory, when it broke out here, you know, in this area, you know, might some investors have been willing to buy? They might have. And others might have said, nah, I'm going to wait until I see it cross this moving average. It just depends on what your trading plan is. But given our propensity for drawing lines in this class, what some might have looked at, if they saw that indicator on the RSI, it's like, ooh, well, that pairs nicely. Well, this line wasn't maybe perfect. Let me just have another stab at it. I'm just trying to hit as many of these as I can, the tops of them. Okay. So does this pair nicely with this diagonal resistance breakout? And then we have this indication here that, hey, you know, could this be a buy signal? And could we have done a swing trade back to the previous high? You know, and might that have worked out? Well, you know, hindsight's 20/20, right? And you know, if you want, like I said, it's pretty easy to add those buy signals. But when you start looking at, when you use an indicator a lot, you may not feel you need them. And this might say, hey, this has gone up a lot, like it had right here. Maybe you want to adjust your stop when it starts falling. You know, and it's just kind of a gentle reminder. Maybe we want to consider taking some profit here or adjusting our stops just in case this isn't a one-day pullback, which it turned out not to be. So we've covered a lot of ground here. We've talked about the relative strength indicator. We've talked about the MACD. We've talked about stochastics. We've talked about simple moving average, exponential moving average. We've talked about death cross and the golden cross. And we did an example trade. We did an example trade on Kroger, and then we looked at several other charts to just, like CVX, to just look at how we might consider using these indicators to make more informed decisions on when to both enter a trade and on when to perhaps exit a position. So guys, Brett has been posting lots of great stuff in the chat, including links to this class. So it's my chance to just remind you that if you haven't subscribed to this channel, you'll want to do that. And here's our relative strength indicator. And this is, you know, our signal line at 70 for overbought and 30 for oversold. You know, we've already talked about that. We've looked at lots of examples. So I think we've covered what we came here to do. So if I could ask you to subscribe to the channel if you haven't already done that, it's another free resource to take advantage of. Follow Brent and I in the land of X, Brent Morris CS and Barb Armstrong CS. And then if you would hit that like button, what that does is it lets us know that you found this content valuable, but perhaps more importantly, it moves this up in the algorithms on YouTube so that more people can find this content. So with that, my friends, I thank you for joining me today. Stay tuned. There's lots still to come this afternoon. And we will see you in a webcast coming up soon. Take care, everyone. Bye for now.